So we have here the introduction to chart of accounts. So a chart of accounts is a listing of the names of the accounts that the company has identified and made available for recording transaction in its general ledger. A company has the flexibility to tailor its chart of accounts to best suit its needs, including adding accounts as needed. So, in accounts means that a record in the general ledger that is used to collect and store similar information. And for example of this, a company will have a cash account in which every transaction involving cash is recorded. So a company selling merchandise on credit will record the sales in a sales account and in an accounts receivable account. So for our general ledger, that part of the accounting system which contains the balance sheet and income statement accounts used for recording transactions. So within the chart of accounts, you will find that the accounts are typically listed in the following order. So we have here the balance sheet accounts and income statement accounts. So within the categories of operating revenues and operating expenses, accounts may be further organized by business function such as producing, selling, administrative finance and financing, and or by company divisions, product lines. Okay, so a company's organization chart can serve as the outline for its accounting chart of accounts. So, for example of this is a company divides its business into 10 departments. What are the departments? So, production, marketing, human resources. So, each department will likely be accountable for its own expenses. So, sample of expenses, salaries, supplies, and phone expenses. So, each of that department will have its own expenses. So, a chart of accounts will likely be as large and as complex as the company itself. An international corporation with several divisions may need thousands of accounts. So, whereas a small local retailer may need as few as 100 accounts. So we have here the balance sheet accounts with assets, liabilities, and owner's equity. And for income statement accounts, we have here the operating revenues and expenses, and non-operating revenues and gains, non-operating expenses and losses. So each account in the chart of accounts is typically assigned a name and a unique number by which it can be identified. So software for some small businesses may not require account numbers. So account numbers are often 5 or more digits in length, with each digit representing a division of the company, the department, the type of account, and so on. So we have here the example of a account numbers and current assets for a large corporation. So for a large corporation, we have a current assets, property, plant, and equipment, current liabilities, long-term liabilities, stockholders' equity, operating revenues, cost of goods sold, marketing expenses, payroll department expenses, and others. It depends on the company expenses. So we have first here the current assets. So current assets has A. Cash regular checking, cash payroll checking, petty cash fund, accounts receivable, allowance for doubtful accounts, inventory and supplies, prepared insurance. So for the property, plant and equipment, sample of this is the land, buildings, equipment, vehicles, accumulated depreciations for buildings, equipments, and vehicles. Also here we have current liabilities that has notes payable, accounts payable, wages, interest, unearned revenues. So for long-term liabilities, we have mortgage, loan payable, bonds payable, and discount on bonds payable. About our stockholders' equity, we have common stocks, retained earnings, and treasury stocks. So we have also here the operating revenues, cost of goods sold, and marketing expenses. Payroll department expenses. We have also in a large corporation, they have separate payroll department, which they include the department for salaries. Includes to them are payroll taxes, supplies, and telephones. We will go now to the small company. So this is a partial listing of another sample chart of accounts. Note that each account is assigned a 3-digit number followed by the name account name. So in a small company pala, may ginagamit silang 3-digit number only. Rather than in the large company, they uses the 5 digits. So here the first digit of the number signifies if it is an asset, liability. So the first digit is 1. It is an asset. If the first digit is 3, it is a revenue account. So when the company decided to include a column to indicate whether a debit or credit will increase the amount in the account, this sample chart of accounts also includes this sample chart of accounts also includes a column containing a description of each account in order to assist in the selection of the most appropriate account. So we have here the sample of assets accounts. Includes the cash, accounts receivable, merchandise inventory, supplies, prepaid insurance, land, buildings, accumulated depreciation to buildings, equipments, and accumulated depreciation for equipments. So we have here the descriptions. You can read it. You can read it in your screen. Okay, so we will proceed to liability account of a small company. So we have here the notes payable, accounts, wages, interest, unearned, and mortgage loan payable. Also, we have here the owner's equity. For the sample, Mary Smith have capital and Mary Smith's drawing. So for Mary Smith capital, amounts the owner invested in the company plus earnings of the company that not withdrawn by the owner. So for the drawing, they debit it an amount that the owner of the sole proprietorship has withdrawn for personal use during the current accounting year. At the end of the year, the amount in this account will be transferred into Mary Smith capital. So next is the operating revenue account. So we have here the service revenue. Increase to credit, then amounts earned from providing services to clients, either for cash or on a credit. So we have also the operating expenses accounts for a small company. So we have here the salaries expenses, wages, supplies, rent expense, utilities, telephone, advertising, and depreciation expense. So you can see here the accounts number have 3 digits only. So for the non-operating revenues and expenses, gains and losses, so we have here the interest revenues, gain on sale of assets, loss on sale of assets. So accounting software frequently includes some sample chart of accounts for various type of businesses. It is expected that a company will expand and/or modify this sample chart of accounts so that the specific needs of the company are met. Once a business is up and running and transactions are routinely being recorded, the company may add more accounts or delete accounts that are never used. So we have here the at least 2 accounts for every transactions. So you remembered our double entry system for the last sessions. So you can visit it in our classroom to review what is the double entry system. So here, the chart of accounts lists the accounts that are available for recording transactions. So in keeping with the double entry system of accounting, a minimum of 2 accounts is needed for every transaction. So at least 1 account is debited and at least 1 account is credited. So when a transaction is entered into a company's accounting software, it is common for the software to prompt for only 1 account name. So this is because the software is programmed to automatically assign one of the accounts. So for example, when using accounting software to write a check, the software automatically reduces the asset accounts and accounts cash and prompts you to designated other accounts. So, malaking tulong yung account number kasi pwede mo yun i-encode lang yung account number lang. So, in debiting and crediting the accounts, we have these general rules for expenses, revenues, assets, and liabilities.